Hey everybody, Jerry here with Greystone Trading. I'm making this video on the risk management parameters of our trading system that we use. So if there is a secret sauce to our options trading program, it is 100% the risk management and how you cannot lose your money in this trading system. You can lose trades, but you will not blow an account as long as you follow these very, very closely. And hopefully you all will do that and not learn from your own mistakes with this. It's going to happen. But if you can follow this to the T, you will never, ever blow your account. So the system was built with this brilliant foundation of trading with a 10% of your account and a 10% stop loss. And then if you were trading a smaller account or more aggressively with a 20% of your account and a 10% stop loss, 30% of your account, 10% stop loss. So the very most that you could lose at one time with a 10% stop loss on your trading account would be 1% of the account. Now, if you're trading 20%, you could lose 10%, and that would make it 2% of your account, or 30% of your account with a 10% loss would be now 3% of your account. So with this trading system here and 3% of your account loss, 20% with a 10% loss, or 10% with a 10% stop loss, that would equal to 100 losing trades in a row that you would have to take to get wrong in a row to blow your account, which is mathematically impossible. So now, over the course of the last 2 years of trading, we've had market conditions have been very volatile between elections and wars and things going on. So what we have done is we have modified our risk management to be in particular trades in our trading windows that we trade. So what we've done to do this is we have widened the stop, and we have either sized it down or we have kept it at a relatively different stop loss to the sizing of the account. So you're still not losing a huge portion of your account. Never ever in one trade will you lose more than 3% of your account with a stop loss. So for example, if we modify this to a 10% of your account with a 12% stop, you would now be losing 1.2% of the account, or 15% of the account with a 12% stop would be a 1.7, and then a 20% of your account with a 12% stop would now be so. And if you were sized very aggressively with the larger stops, it would go up to 25% with a 12% stop, and then a max loss of the 2.9. However, I would never ever recommend going to the full 30% with the wider than a 10% stop of that. Like, that's just too much loss in one trade to go against you, in my opinion. So now that being said, 10% of your account with a 15% stop, which our current market conditions have been very, very accommodating to this. So it is allowing us to withstand these bigger retracements. So 10% of your account with a 15% stop would be 1.5% of your account, 15% of your account, 20% of your account with a 15% stop is now equaling 2.5, and 25% of your account, that 15% stop is now 3% of the account. So all this you're doing is you are setting your stop loss and the sizing of your account to where you cannot damage your account in a way that it cannot be made back with one or two profitable trades in your favor. So the system is built around a 60+% win rate. If you do the math on what 60% of your trades are at an average of 14 to 15% trades, with the stop losses going the other direction, your account will genuinely move forward 2+% a week. We aim for 2.5 to 3% a week account growth, compounded over that. This will equal you multiple high figure payouts, even with a small account. So if you were trading a $10,000 account and aiming at 3.5% a week, which is very, very realistic with our system and our risk management and the parameters that we use, over the course of 3 years, compounding that at 3 to 3.5% weekly would be approximately $1 million in account growth. So you don't need these big trades. You don't need these huge wins. You just need the slow, steady consistency to do that. So a lot of times we would take the trades and we would have that 10% stop, but the candles would retrace a bit bigger. And in the process of them retracing a bit bigger, it would take us out of a trade that did end up following through. So what we have learned as traders, if you have these big candles or these big regions of the trade happening, what we'd want to do is widen that stop to allow us to survive that retracement. So then we could get the full trade or the the half off and the profitable green trade that we're looking for. Now, I know many of you are thinking in the process, why wouldn't we just wait for the retracement and then enter? Well, when it breaks out of the range, whether that is a lower level of support going to an upper level of support going to a lower level of support, or a lower level of resistance going to an upper level of resistance, or a full breakout trade, most of the time it will distribute right away. So the idea behind allowing the larger stop loss for the retracement is it will not retrace every time, and then you would miss the trade and you would miss your opportunity in that trading session to grow your account to get closer to that weekly target of that 3 to 3.5% that you're after. Now, the lower that you are sizing, if you are sizing at this 10%ish region, the realistic goal that you are looking for is 2% on your account. Now, that being said, if you are sizing at 15%, you're probably looking at more like 2.5 to 3% account growth. And at 20% of your account, you're looking at probably 3.5 to 4.5% on your account growth. And now, these are regions, they do not have to be very specific. The closer, the better, obviously. Now, it's very hard and it can be very challenging, and some people are going to be very strict on what they're looking for. So if you're sizing at 10%, right? And let's say we're looking at contracts that are $1.50. In the process of all that happening, you could be and would be looking for approximately $1,000 worth of contracts. Now, that's possible if you have contracts at the right number, but sometimes those contracts are going to be costing, say, $1.42 or $1.62 or $1.61, and these random numbers. So this is a ballpark. It needs to be as close as possible, but do not beat yourself up about it if it is slightly above or below that. And then the biggest parameters of this risk management thing is you want to be sized very consistently on all of your trades until you get close to your weekly goal. Or if your first trade is a full trade or your second trade is a full trade, and then you are now at a weekly goal or close to a weekly goal, you want to always size down to protect that that weekly goal or a green day. So example, you take a trade, your first trade on a Monday morning was a green trade and you're up $300 on your account. The last thing that you want to do on the next trade in that session is size to where you can lose that $300 on a trade and be back to zero. So if you took a trade and you were, say, with 12 contracts, and those 12 contracts made you your $300 on your account, if you do decide to re-engage the market, you should size that down to, say, 4 contracts or 6 contracts, to where if you get stopped out, you get to keep at least 2/3 of your winnings, or at least 1/2 to 2/3 of those winnings, depending on what that stop is. And if that is your account is not large enough to do that, or if it does not make sense to take that risk, just be happy with the winnings and come back to it a little bit later. Try to limit your screen time to 1 to 1.5 hours per session. This will allow you to focus a lot harder. This will allow you to be a lot more dialed into the charts, and it will also keep you from setting levels that are not accurate. So in the next video, we will break down some of those things that we're looking for there. But this is 100% the risk management system that we use and how we break it down on a daily basis when we do our live trades, which there are now 9 sessions to learn this and see this in real time. So regardless of your account size, whether that's $1,000 or $100,000, in the beginning, when you are learning the system and you are becoming a profitable trader and sizing and learning the execution, the entries and the exit, that is the paramount parts of this thing, is to learn that. This risk management will keep you from losing your account as long as you follow it. Thanks, guys.